Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today. December 21st, 2023. But first, let's take a quick look at the market. E-mini S&P is up 32 handles, meaning 32 points, after the E-mini S&Ps went down significantly yesterday. They quickly bought the dip back with E-mini S&Ps up 32. They were up all night long. NASDAQ up 140 on a percentage basis. The Russell's up the most, up 24 handles, and the Dow is up 214, and volatility is in by 15 cents. We got a little bit of percolation in volatility here. Let me show you quickly what I went to today. I went down to the to my watch list. I went down to my watch list. I click on my watch list. I changed my watch list to see if I could find some different stocks or highlight different stocks to the NASDAQ 100. In my mind, most of the NASDAQ stocks have higher monthly implied volatility, although IWM, the small caps, actually have, the Russell 2000, actually have the highest IV rank, with the Qs coming in around 15 or 20%. Up a little bit, but not up a lot. And I'll show you what I did here. I changed my IV rank to go from high to low. You can change it from low to high by just double clicking on it, and you'll see here all the low IV ranks. And then I went to the high IV rank by clicking on it one more time. And a stock that kind of jumped out at me, I'll put it up there so it'll highlight it for you, was Costco. Costco has an IV rank of 37. The IV index 5-day change, meaning this implied volatility, what has it been doing over the last 5 days? Well, it's going up by 2%. It is a very high price stock, $667. And right now, it's sitting on the lows of the day, $661. Only up 26 cents. IV rank is good at 37%. That's that same number that you see here on the right-hand side. So let's take a look at what I'm looking to do here. But first, we'll look at the charts. So we'll just go right to the charts. On the Tasty Trade platform, if you have Costco or whatever stock you have already in there, as you click around, it will stay on that Costco or stay on the stock that you're looking at. You can see here that Costco has had quite a year in 2023 at the high end of its range, but volatility continues to stay bid in Costco. Now, a $600 stock, $661 stock, you're going to have to use a defined risk trade. I mean, it's just going to use too much buying power to be able to trade this naked. So that's going to lend us to looking at an iron condor, something that has defined risk. Or if you're bullish or bearish, you would do one spread or the other. You might actually pick the spreads that I'm doing, only do one side. That's entirely up to you. I'll explain to you why in just a minute. January has 29 days. 45 days is optimal. Now, when you look at the markets, even in February when we get to it, the February monthlies with 57 days, which is what I'm going to trade, you'll notice that the markets are a little bit wide in here. There's good volume, good open interest, but the markets are a little bit wider, so you want to go in above the price if you're looking to sell something. You want to go in above the mid price. You want to go in below the mid price when you're trying to buy something, just because the markets are wide in here. I'm not going to do January with 29 days because we look to roll these trades with 21 days to go, and I'm only 8 days away. Closest to 45 with the most liquidity is going to be these February 16 options. All right, what am I looking to do here? The first thing I like to do is look at the two credits I'm going to receive. You'll notice here that I put up the volume here. It's a little bit light, and now we'll go to the open interest just to show you that. And you see that the open interest is starting to grow in these February options. You've got hundreds just about on every line. What am I looking to do here? I'm looking to do an iron condor. I like to go around a standard deviation, at least with my break evens. Let's see what we can find. For the ease of things, I'm going to go right to that 15-ish, 20-ish, 18-ish delta. This time it has 17. I'm going to sell the 715 calls. I'm going to buy the 730s. I'm going $15 wide. This spread is trading for around $1.67. I want to get around the same credit for each spread that I'm selling. So just remember that for a moment, $1.67. I'm going to take this off. I'm going to go down to the 615s just to see if it's I'm $100 wide on everything. I'm going to sell the 615 puts, and I'm going to buy the 600. Still around, still $15 wide. Same with, and look, I'm collecting around the same credit, $1.65, $1.67. You'll notice that the markets are a little bit wide here. I was able to get filled about 4 cents under mid price. Let's take a look here. I'm going to sell this spread. It gets me the same probability of success around that 17, 18 delta. So I love that. I love that I'm able to get the same amount of credit on the call side, the put side. On a high price stock like this, you don't want one side to be giving you, 80 cents and the other side, giving you $2.20 or something like that. You don't want it to be, you want it to be around the same. So at least you're getting the same amount of credit for the same amount of risk. I was able to get filled at $3.31. You'll notice again, the markets are a little bit wide here. I told you to go in above the market when you're looking to sell something. If you're selling something, you're doing it for a credit. I'm using $1,170 worth of buying power on this overall trade, and I'm collecting $3.31. My probability of profit, or POP, is 67%. I like to have that number, wrapped around 65, 68, somewhere in that, or higher, right? As long as I'm collecting enough credit for myself. Here you can see the mid price is moving because there's such a high priced stock here on Costco, $661 stock. So go in above the market here, maybe go in at 334, 335 if the stock is sitting right here. I can show you where I got filled on this, but before I do, it's completely delta neutral, less than one share of stock. Negative 27. My max profit, obviously the credit I received. My max loss, obviously the amount of buying power I'm using on any defined risk trade. What am I hoping for in Costco? That Costco sits, hangs out, doesn't go much lower, doesn't go much higher for the next 2 weeks or so, and then hopefully I can get myself about $1 on this overall trade. What would I do if it goes against me? Well, I would probably just move down the untested side. If the stock continues to go lower, I would probably sell the 710.15 call spread to move this lower, or the 705.15 call spread to move this lower. It will use more buying power, as you can see here, but that's the way I like to adjust these wider iron condors. Can you just sit with this iron condor and do nothing? You most certainly can. Can you sit and wait until the stock gets down to around or close to your short strike before you do something with the untested side? Yes, you can. I like to be a little bit more aggressive with my overall deltas. When this spread's delta gets to around 10, 15, then I will look to roll down the untested side. That's how I like to do it. And I like to do it by just moving the one short strike, which does use more buying power, does give me more risk in the opposite direction that the stock is going. Remember, if the stock is going lower, I'm going to roll down my call. And if the stock is going higher, I'm going to roll up my puts. That's the way that I like to do it. You can see this trade when I place it in real time by coming down to here, click on the follow page. I have everybody listed up here right now. You can see there's Shark Jeev having a nice trading day in SPX. I'm going to click on Bob the Trader. He's the last one to make a trade. You'll see there's my Costco trade. I did this at 10:24 a.m. when the stock was sitting right around here. Well, the stock is 661.86 right now. I did it when it was 35. The IV rank is 37, so you can always check to see how the IV rank goes up or down. And my pop is 67%. I'm selling an iron condor. If you click on it, I give you a quick little description of what I'm doing, and this is what's really important. I reduced my size. Why? Because of liquidity and the high stock price. Just because of liquidity, meaning the wide markets between the bid and the ask. Liquidity doesn't necessarily have to mean how many contracts are trading. It's the disseminated price. I like to see tight markets, which we really didn't have in Costco, between the bid and the ask. So because of that, I moved my size down. I reduced my size. It's a classic iron condor, meaning it's 1/3 the width, or pretty close to 1/3 the width of the strikes, a little bit less. Well, that's my trade for what seems to be, I think, the end of the year. This might be my last podcast for the year, but that doesn't mean you don't have homework. You have to bring, move, transfer your account to Tasty Trade, the #1 brokerage firm in the galaxy, and it helps us keep the lights on here. We appreciate all your support through 2023. You've come out strong for us, and we hope we performed well for you. We try every day.